The problem with retirement planning is it's so hard to predict how much money we need to retire because, well, we want to be able to have enough income to cover our desired lifestyle. In this video, I'm going to show you how you can use a simple free tool to figure out how much money you'll need in the future to support the lifestyle that you're living now, that you estimate that you want to live in the future, because there is a very, very important overlook factor in retirement planning by most people. Hi, I'm Camille Gaines here, and on my website, retirecertain.com, I write about investing for the past 40 years or so, as well as creating multiple income streams over the past 15 plus years after I stumbled into early retirement along with my husband. And I'm not trying to sell wealth management services. I just like investing. I think it's super, super important, and it's always been a passion of mine. Here, I'm going to show you this important tool. Now, if you like this type of information, make sure you subscribe to my channel and click that little notification bell so that you know when I post a new video. All right, this free tool is available online, of course, at n2013dollars.com. I'm going to step you through exactly how to use it, and I've got it open here on my screen so I can show you. All right, the 2013, in case you can't see that, is in numbers. All right, so n2013dollars.com. All right, and I've got more information about this on my website at retirecertain.com. What we're going to do is use an example of someone that is looking to retire at 55 and they spend about $10,000 a month. Now, you may be thinking in your mind, oh, well, I only spend $1,000 a month or $2,000 a month. I'm very frugal and I don't need much. Or you may be thinking, what, are you kidding? $10,000 a month? I need $20,000 a month to live the way I want, or $30,000. That's not what this is about, okay? This is about you working your own numbers. Everything that I teach about and coach clients about, write about, is about your own numbers and empowerment, and not having someone else just tell you, and giving you the tools and resources to figure out for yourself what it is you want. So let's go into this calculator. And what we're going to do here is, and you can see that I've already cheated a bit and put the numbers in. So we're looking at someone that's looking to retire again at 55, and they spend about $10,000 a month with all their expenses. All right, so the first thing you do is put $10,000 into this very first field here, all right, and all you do is type it in. It's really simple. The start year is really late 2021 right now. You can do this 5 years from now if you stumble across this video. It doesn't matter, any year. You put the start year in here. That's where you're beginning. That's what you're spending right now, or you have estimated that you want to spend. So what I like to encourage my clients to do, and I write about, is just what lifestyle, how much do you spend now, and adjust that for what you want to do in retirement. And traditional retirement planning is about, oh, let's cut all this out, right? You don't want to do all these things anymore. I'm the opposite. I say, you've got all this free time. What do you really want to do? And let's figure out how we can make that happen from a financial perspective. What are the various options to do that? All right. So we're going to take $10,000 a month because this person has gone through those steps and figured out that's about what I want to live in retirement. Okay. And then we know that when someone is in their 60s, this guy or woman is retiring at 55, and let's say that in their 60s they want to travel all over the world, or maybe in their 70s or 80s they want to do some extensive traveling and do some things that cost a lot of money. And then, you know, they're probably going to slow down, right, in their late 80s or 90s. Let's be realistic. Okay, so what we're looking at is sort of an average, and we're not going to get into too much detail because we'll get into, what is it, paralysis analysis and not move forward. So we're going to just use about $10,000 a month over all those years, okay? And that's our estimate. And then we're going to go out to early 90s because, well, in this day and age, people are living longer. And even though most people don't live that long, none of us know how long we'll live. And we may live that long and we don't want to run out of money. So I encourage everyone, unless they have information about their life expectancy that might affect this, I encourage everyone to sort of plan for their early 90s. And some people live longer than that, as we know, and we also have so many advances in medicine that take us beyond, even 90, right? Okay, so we put in here the end year because, well, that's the final year, dun, da, da, right? That we still need that income to live, and granted, it'll be less than, as I said. All right, so then we're going to the future rate of inflation. All right, 3% is the default in this calculator. The reason it's 3% is because historically inflation has run about 3%. In more recent years, the average has been about 2%, but we have to remember that in the early 1980s, inflation was extremely high. So we have to look at way back, data that goes back. In all my work, I like to look at historical data as far back as we can that's still appropriate and might happen. So, for example, that high interest rate and that high inflation rate in the early 1980s may happen again. It may happen again in my lifetime. So I want to plan for that. I don't want to just say, oh, well, great, over the last 5 years or 10 years, the stock market has done this and inflation has done this. We may not always have that. And when we plan for that and it doesn't happen, it can totally ruin our retirement plans and our ability to live how we want, to be able to support ourselves. So it's important to look at really long-term historical averages in doing planning. So that's why I'm saying 3%. 3% is still pretty low. Some financial gurus, experts, wealth managers are saying to use 4% now for inflation planning purposes. I'm just going to go with 3%. That's the historical average. I don't know what it's going to do. No one knows what it's going to do. Even the best economists really can't predict the future. So I'm going to say 3%. And I guess that I feel like I should touch on, that's one of the biggest problems with retirement planning, is we have to use all these estimates, future returns of the stock market, inflation, life expectancy. So we're going to go with the best estimates that we can for this. All right, and then we just click predict. And again, you can come in here and just do this. See, you just click these little arrows and you can put in anything you want in here. All right, it's really easy to change the data for any time frame that you're doing this. Totally free, great tool. All right, and then I'm clicking predict, and we see that the $10,000 in late 2021, or when I'm doing this, in 2056, it will take $28,000, 138, 62 cents, right, to live that same lifestyle that cost $10,000 in 2021. So it's really important to consider inflation when you're planning for retirement. Many retirement calculators, almost all of them, consider inflation for you when the numbers are run. But what inflation number are they using? Is it 3%? Is it 2%? Is it 4%? So that's an important question for you to ask as an empowered investor and someone that is taking care of their own financial future. What inflation rate is being used? Am I comfortable with that? And then the next step is even to say, what can I do to protect myself from this? What income do I have that is inflation protected, that will rise with inflation? What assets do I have that will rise in value with inflation? Many do. It's our income, though, that we've got to be so careful with, because, for example, a fixed bond income won't rise with inflation. That would be problematic. So knowing this and using this calculator and seeing how much your lifestyle today will be in the future can really, really help you invest for retirement, plan for retirement. Let's look at another quick example. Let's say that you spend, let's just leave the $10,000 a month and let's just go 10 years out. And let's change this to 2031 and we'll leave it at 3%. And we see that just in 10 years, that $10,000 lifestyle will cost $13,000. So for someone retiring at 55 that wants $10,000 a month in income or has $10,000 a month in living expenses, let's put it that way because we do get into some other variables if we put it the other way. That will cost $13,439 to live that same lifestyle, to buy those same things. And that's because the value of the dollar is depleted every year by inflation. We can't buy as much as we could previously with that same amount of money. I hope you enjoyed this video. Above all, remember, retire certain.